Good morning, everyone. Today we're going to go over risk management. So the key is, you don't want to be around 50, you want to be around 15 to 20% of your account. Um, sometimes even less. It depends on your true risk. For my risk, I do sit around that 15% range or 10 to 15% range. For many, I believe they should sit around the 5 to 10% range. It also depends on how big your account is as well. So that could also differ with risk management. Now, here's one thing here. This, is mostly related to options. So, focusing on buying 2 to 4 weeks at a time, helps with the risk management in that way. That you have more time for a position to, hit your in the money, situation, or at least, keep you safe if a dip indeed happens, or let's say your inputs, if it continues to run, so you're safe and have time that you could either add more or, the contracts don't drop 90% because it's a weekly contract. Um, another thing is this is just basically a simple one, unless you really just want to do a lotto. And by lotto, I mean, you really don't want to risk at least, you really don't want to risk money. Um, yeah, you can make, possibly, let's just say 1,000%. But, you know, a lot of these times you could easily lose 100% of that, position. So, only risk like $100, $200 max on these lottos. And, for this one, very simple, lock in the profits. I think one of the key things that we've started to do a lot is a lock in profits at 15 to 20% of a move. Now, what I'm truly trying to incorporate there is at least locking a quarter of the profits, or maybe even half, and then just letting the rest ride. And then you could continue to be in that play. And like I said, going back to the option thing here, time and near money. So buying those 2 to 4 weeks time, and let's say Apple is 450, get a 455 call, because in one day Apple can make $5 there. So that's something to look at for at least option wise. Here is some more rules on risk management, and discipline is definitely one. I know a lot of people who definitely share their emotions. This can cause others to sell. This can cause others to buy, and in my opinion, that's not really good for a lot of traders out there. I mean, even including myself, if you start to see a lot of people, um, expressing emotions, it could really hinder your own ideas and such. So, you guys got to try to stay disciplined, keep it to yourself. You know, don't overforce your emotions and express them. Try to keep them to yourself. Another thing is, you have to try to hide those emotions. You have to try to, you know, look at the play, focus on the chart, focus on possible news, focus on, any catalyst, and see if the play is still good to continue. Usually I give it a 2 to 3 day rule. If it doesn't move by then, we sell out and, either take our losses, either take our mini profits, or, take our even cut. Um, Patience is key. As you can see, I wrote Pay, and then shins. Um, this is the way I spell it right now, especially only in stocks at least, because if you have patience, there's a much better chance you're going to get paid. And, you know, like I said, patience is key. After, a 10% drop in a stock, well, a 10% drop in options at least, People start to freak out, people start to sell, and then the next day it could be up 50%. Um, so you got to grow patience. You got to start to, realize that the market can move both ways. The market could be, you know, pushed up or down. So focus, focus on patience. Cutting losses is big. I know people who used to bag hold things for months and months and months, and sometimes even 1 or 2 years. I've personally never bag held anything. I, if I'm down in something, I cut it that day. Or if a stock drops under my supports, I cut it that day. There's no reason for me to, you know, bag hold anything. That's just money being lost in a position that I can't use elsewhere. So it's not good for me, and it definitely is not good for you. Um, over trading is another thing. If the day isn't good, don't overtrade. If the day is good, still don't overtrade. If you're up for the day and you know that's a good amount of money, you know, take it and run. Same thing for losing. This is where this really comes into trying to revenge trade. That could hurt you even more. And trust me, I've done it to myself as well. Down, let's say 5,000 for the day. I try to make it back. Then I'm down 7,000. You know, just gotta wait for the next day. Truly. And here's the bag holding again. You know, like I said, just think of it this way. Your money is useful in other positions than it is, you know, being in a position that is stuck, and you're down, let's say 30, 40, 50%. Emotions, as we've talked over this too, you know, this is something that you truly, truly have to try to grow. It definitely takes time, but you have to grow this. This is one of the biggest things in trading. If you can't grow patience, if you can't grow to, cut back on your emotions, you're still going to develop the same patterns, um, make the same mistakes. You need to grow on this. Yeah, the key is cutting your losses quick and letting your runners run. Like I said, that 15, 20% mark, you start to at least take quarter of your profits, then hold the rest. Usually have a stop probably at 5% mark, just in case, so you could at least come out positive, or even 0%, because in a way you still come out positive with the 15 to 20% you took already. And portfolio management. Now this comes into um, everything here. I think a lot of people are going in way too big, which is causing their emotions and patience to die down. Emotions actually, they increase, but the patience dies down a lot. Um, if you're going to play for, let's say, 5% of your account, 10% of your account, you're going to have a lot of less emotions, in my opinion, compared to being all in. And I believe a lot of people are usually go, let's just say, 50% of their account. And, that's a lot of money for everyone. You put in money into the market. If you put in 50% into one play, you're definitely gonna, not have much patience. That's something I believe, you need to cut back on. Um, let's say you buy Apple calls and they're $3 a piece. Your account is 2,500. You buy 5 Apple calls, so that is 600, 900, $1,500, and you have 2,500 in your account. That is about 60% of your account, and you're now, they start to drop a little bit, and you just lost, 300 or $400. Let's say 300. So your account just lost around 15% after one trade. Your whole entire account. That's a lot of money. 2,500 minus 300, 2,200 is left. You know, you got to focus on portfolio management, making sure you're not going all in. It'll really help you in the emotion side. It'll really help you on the patient side. This is why we do starters. You know, let's just say we buy just one of those calls. Apple drops, the contract drops 10%. Then you could buy another one. So your average is much better now. And then, now it goes up 50%. So you grew patience because you weren't risking that much money. And then, um, and then it started to go up again. So you had a better average and you weren't that deep. You had a starter of one call and then you bought another one on the dip. And now you're set to go for the run and then you take out you cut out with profits. It's just it truly is mind games and you just gotta be able to control them. Trading is 90% emotions, and this is why many traders, do not succeed. If you look it up, I believe it's around 90% of day traders do not succeed. And, this is definitely a big part of the reason why, in my opinion. Um, Other than that, I hope this is helpful. And I hope everyone has a great day and a great week.